Good morning and welcome. This is Ask Profit on NDTV Profit. My name is Mathew and with me is Smriti Chaudhary, and we'll take you through the next half an hour or so of trade. You see the number flashing at the bottom of your screen. That's where you can send all of your stock-related questions to us, either short-term or long-term. And if you're tuning in on any of our social media platforms, you can send your questions on the comment section or the live chat facility, and we'll take them over the course of the day or over the course of the next half an hour. Let's take a very quick check of how the markets are doing right now. If you look at the intraday chart for the Nifty 50, you will see a slight intensification of the selling, and we're at the low point of the day, down about 0.7% or so, but holding above the 22,500 mark. Remember, we started very close to the 22,700 mark at the start today. We're down about 150 points or thereabouts. Now, the broader markets are also losing ground, but not tremendous cuts. Of course, that has also intensified over the last half an hour or so, and you have the mid-cap index that's now down about 0.7% and about 1% off on the small-cap 250 index. Now, before we get further into a check on individual stocks, I do want to address the flashing news on the screen, and that is the RBI annual report, which has also laid out the expectation of the central bank for real GDP growth for the next financial year, that is FY25. That's the current financial year, that is. Vishwanath Nair, the banking and economy editor, is joining in to tell you about what that number means and what the context is. Vishy, what can you tell us?
Morning, Alex. So what the RBI's annual report for the year ended March 31st, 2024 suggests is that there's likely to be, I mean, this is part of the commentary before the numbers of the RBI come into the picture, but the RBI assesses that FY25 GDP growth is likely to be at about 7%, and that's a vote of confidence as far as India's GDP growth is concerned. The other thing that the RBI has noted in its annual report is the size of its own balance sheet. That's up about 11%. Remember, last year that growth was only about 2.5%. This time that annual, the RBI's balance sheet has risen quite sharply. This is also reflective of the 2.11 lakh crore surplus transfer that the RBI did just last week to the government, and this is coming because of this sharp increase in the balance sheet size. What is also contributing to that large surplus is a roughly 60%, 56% odd reduction in the expenditure of the RBI, while on the income side they have gained quite a lot through foreign sources during this last financial year that went by, and those things have added to this about 2.11 lakh crore worth of surplus that the RBI has transferred. Of course, we are still going through some of the specifics that the RBI has given. It expects that going ahead, food inflation, headline inflation is likely to peter down during the rest of the financial year. Food inflation is still vulnerable to recurring supply shocks. So, of course, these are general commentaries that the RBI makes even during the monetary policy, and it continues to make that in the current annual report as well. What we need to, of course, closely watch out for is the financing of the RBI. Remember that this reduction in expenditure is coming still on the back of higher provisions that the RBI has made on the contingency fund. So during this FY24 financial year, they've transferred roughly about 43,000 odd crore to the contingency fund, which was less than about 1.3 lakh crore last year, but still a significant number. So on the back of this higher provisioning, you are still seeing large surplus, which the RBI has, of course, managed to transfer to the government.
All right. Thanks so much, Vishy, for wrapping that up for us. Let's very quickly go back to the markets then, and as I pointed out, you have cuts of about 0.7% for the Nifty 50, and look at a couple of individual stocks then. And in fact, you have from the benchmark index, Reliance Industries, which is proving to be a bit of a drag. It's down 1% or so, and proving to be a weight on the Nifty 50 at this juncture. A few other mentions from the broader markets I will make based on the big headlines that we took into trade today. And Edelweiss is down about 14.8% at this juncture because of regulatory action that the RBI has taken against Edelweiss ARC as well as another group company, Cummins India, on the back of earnings which at the face of it looked pretty good. It's down about 5.6% though. The metal index as a whole, and just pull up the sectoral indices and you will see that the metal index is the worst performer in trade today, down about 2%, and that's largely on the back of Tata Steel, which is reacting to its earnings. And that's exactly what we're going to talk about in the focus today. Tata Steel reported a net profit decline of 65% on account of an exceptional loss of about 600 crore rupees. But operationally, the company has managed to more or less meet expectations. Lancelot Dikuna, the CIO of ValueX Wealth Connect, and Amardev Singh, who is the head advisory at Angel One, are joining us on the program. Lancelot, coming to you very quickly on Tata Steel. What do you make of the results, and would you hold on to this or buy fresh if you have the opportunity?
So I think the results were actually not bad because if you look at the international operations, the key drivers, India operations have done very well both in volume growth as well as in EBITDA growth. But in the past, the international operations, which was in UK and Netherlands, has been an overhang. So what we've seen in this quarter is that they have reduced their loss, EBITDA loss, to about 34 million pounds, which is quite low, much lower than the expected loss that was there. They've also announced that they are entered into final stages of settlement with the trade unions there. And they are looking at, shutting down one of the units that side, and then starting on the electric arc furnace. So these initiatives will actually play out better, over the next 2 to 3 years. Also, if you look at it, they have about 33,000 crores of cash in their books, and the net debt that they have is about 77,000 crores. So given that background, I think, the position for the company financially is quite comfortable, and the improving outlook in India for steel demand as well as steel consumption augurs well for Tata Steel. So in case of a decline or even at this, one should continue to hold. And if there's a decline, one can even look at adding to this stock. You will see a run up in the metal prices, etc. So that should help boost profits and earnings going forward as well.
All right, let's start off with the questions now. Good morning to both of you. The first one is from Jerome, who's writing in from Chennai. They're talking about the counter persistent systems. They bought the counter at a price of 3,450 rupees, which is slightly lower than where it's currently trading at. This is a short-term query, so I'm going to come to you, Amadeo, on this one. From a short-term perspective, would you suggest holding on to the counter? There is some profit there that the viewer is making, or would you suggest getting out of the counter, book those profits?
I would say that if you look at persistent, what we are witnessing is a clear-cut case of consolidation happening on the intermediate term chart. So the stock seems to be capped on the upside towards 3,700, 3,750. Whereas on the downside, the stock has got good support coming around the 3,200, 3,250. So ideally, yes, if one gets an opportunity, one should look at exiting the stock, because the intermediate term trend for the stock continues to be, I would say, quite bearish. So from that perspective, it would make sense to look at an exit opportunity.
Okay. Servotech Power is the next counter that we're looking at, and this one's also for you, Amar. And this is a question coming in from Sandesh. He's bought at levels of 85, an average price, and despite positive results, he points out other factors are leading to selling pressure, is what he is saying. But I'm going to get you, or try and get a view from you on the charts and what his strategy should be, because the stock is currently trading at 80.8. It's not done too much in the year to date in 2024. What's the view on the charts going forward, though?
So I would say this is one stock which really hasn't done much over past many months. I would say it's been consolidating on the downside towards 75, 80, and the upside towards 9,500. So more or less, I would say this is a stock where one can exit, because till the time we don't see the stock sustaining above the 85, 90 level, it could be in for consolidation, and that's what is being reflected both on the long term as well as the intermediate term trend for this particular stock.
All right. The next counter is Adani Power. Now, this one's from Sopatra, who's writing in from West Bengal. I'm going to come to you, Lancelot, on this one. From a longer-term perspective, what's the view on this counter? They recently came out with an announcement about the QIP as well, and we saw a little bit of correction in the stock in the last week. But from a longer-term perspective, what's the view?
I think from a longer term perspective, it is going to do well because it's focusing on acquiring assets in the, in the green power sector, and renewable is becoming a bigger part of its portfolio. So you will see, going forward, improvement in the return metrics, so whether it is higher EBITDA and higher returns, that will help the company. The only thing is that the company will also need to make large investments going forward and will require to raise capital from time to time. So that may, result in valuations becoming a little softer going forward. But otherwise, long-term prospects look pretty good for the company.
All right. Sad disclaimer here that you're watching this on NDTV Profit, which is part of Adani Enterprises Group.
AMG Group, yeah. Let's talk about SBI, State Bank of India. We've got Chandra, who's bought at levels of 650, looking for a one-year view. Chandra's tuning in from Bengaluru. The stock is currently trading at 822, so well above the buy price. Amar, what's the view on the charts, though?
I would say the overall long-term view for SBI continues to be strong and firm. Intermediate-term trend, short-term, we are seeing some sort of consolidation, some sort of fatigue setting in this particular stock. So I would say one should look at booking at least 50% profits, and rest one can trail below a 750 stop loss.
All right. The next counter is Marine Electricals. This one's from Muiz, and this is from a longer term perspective. Lancelot, would you have a view on this one?
Unfortunately, I don't track this company, so I don't have an idea about.
Okay. We'll, Amar, can you tell us the key levels in this counter? It's up about 5% right now.
So if you look at this particular stock, I would say, again, it's more of a range play in this stock. Long-term trend, however, remains positive because the stock has bounced back from the recent lows of 90. But I would say that overall, till the stock doesn't breach the 115, 120 mark, it could be in for consolidation. Lower levels could be bought into, but I would say it's more of a range play in this particular stock.
All right, we have to slip into a very quick break. On the other side, we'll take more of your questions, so do stay tuned.
Welcome back. You're tuned in to Ask Profit. The next query that we're taking is from Shazia, who's writing in from Bangalore. They're talking about the counter Bajaj Finance. Mathew, I'm going to come to you on this one. The question is, will it break the 7,000 mark again? It's been in a bit of a negative territory. You see the last 1 year returns, it's down about 5%. What kind of time period are you looking at to cross that 7,000 mark?
I would say if you look at Bajaj Finance, is definitely not going anywhere in a hurry. That is very clear from the long-term charts, because this is one stock which really hasn't performed well, at least over the last 3 to 4 quarters. It's more of a range play, so I wouldn't read much into it. But it's a very good from a trading perspective, because if you look at the range on the downside, 6,100, 6,200, that's a very strong support zone for the stock. And prior to that, even 6,600. So the current low is something which is very crucial. So I would say 6,550, 6,600, that's going to act as a crucial zone of support. If that is taken out, then the stock could witness some sharp correction towards 6,100, 6,200 levels. On the upside, it seems to be currently capped around the 7,000 mark. So I would say it's not a stock to really get into right now, because if you ask me about the trend for the stock continues to remain sideways with a negative bias.
Okay. The next counter that we're talking about is Century Enka, which is a counter that has a market capitalization of about 1,400 crore or thereabouts. It is an Aditya Birla Group company, and it is in the manufacturing of nylon filament yarn and tire cord fabric. The question is for you, Lancelot. We've got a viewer, Rekha from Mumbai, who's bought 500 shares at levels of 396 and making gains right now. And she's asking whether she should book profits at this point, or what are the prospects going forward?
So I think going forward, Alex, this stock should continue to do well, because nylon tire cord is, a key raw material in the tire industry, as well as in various other, textile requirements. So one should, stay invested, because we are seeing demand pick up, for most commodities. The only valuations have been relatively high, and, you've seen the stock actually rally considerably. So from a portfolio perspective, one can look at saying that, okay, since you bought it at lower levels and you're generating good amount of profit, one should look at doing partially book profits at these levels and, hold on to the rest, because while you may have a longer term perception of quality, short term market fluctuations can also, bring the stock down. So it may make sense to book some profits based on the market moves. But from a long-term perspective, one can hang on to the balanced shares.
Next counter is Adani Wilmar. This one's from Alok, who's writing in from Bangalore. They say they bought the counter at a price of 395 rupees. It's slightly elevated levels. Lancelot, would you have a view on this counter from a longer-term perspective?
Yeah, I think this counter, had gone up a lot during the past, couple of months, and then we've seen it correct. So valuation-wise, it still continues to be expensive, and raw material costs could rise for them. So, margins could be impacted when it over the next 6 to 12 months. So one really should take a call whether, to book your losses and exit, or, wait for a serious correction, and maybe if it drops another 20-25%, then you can look at averaging it if you keep the long-term view in mind. But having seen the loss that is occurred, the valuations are still a little expensive, so you may not want to buy at these levels.
All right. Just again, the disclaimer in case you hadn't heard before. This is NDTV Profit, part of the NDTV group, which is part of the AMG Media Group, Adani. Let's talk about Iswar Nandyal's question. He's asking about Renuka Sugars. Actually, he's asking about a couple of counters. Amar, I'll come to you on this one. Borosil Renewables and Renuka Sugars. Which of these, according to you, is a good buy at the current market price?
I would say Renuka Sugars, so one should definitely avoid, because the trend for the stock on the long term as well as the intermediate term trend, that continues to remain on the downside. And looking at the other stock which you mentioned, Borosil, renewables. This again, I would say stay away from this as well because the stock really hasn't performed much, and the stock is in for consolidation. If you really want to enter, then you have to look at levels. I would say somewhere around currently it's around 478. So any pullback towards 450, 440 levels, that could be a good level for entry. One thing you need to understand is that the trend for the stock continues to remain negative. So from that perspective, I would say rather avoid and look at stocks which are strongly trending.
All right. The next counter is SJVN. This one's from Swarnika, who's writing in from Andhra Pradesh. They say they bought the counter at a price of 149 rupees, slightly elevated levels there, Lancelot. We saw the Q4 results, disappointing results, so to say. Revenue fell, margins fell, profit down about... net profit down as well. Margins contracted to 49% versus 61% in the last year. The question here is, should you book profits, or there is some sort of positivity in the counter that in the longer term, of course, so that Swarnika can hold on to this?
So it doesn't look like, the stock had risen along with, most of the PSU stocks, and probably got benefited from the entire rally in the PSU space. But given that, the valuations were completely stretched, and now that you've seen some negative results in this quarter, it's sort of it is now correcting, but in order to make it attractive, I think there's a significant downside available. If it does correct further, then probably it would look attractive, but otherwise, one should look at exiting this counter at even these levels.
Okay. The next counter we're talking about is Inox Wind. This is a question coming in from Sushila, and it's a question based on the technicals. She's bought at levels of 148, 320 shares, asking what the targets are and whether this should be held on to. It's more or less at the buy price right now. Amar, what's the view?
You can hold on to your stock. So on the downside, the stock has got good support coming around the 130, 133 levels. There's only one level that you need to keep or bear in mind. That's 154.55. Currently it's around 147.48. So if it breaches the 154.55 level, then you can expect some upside. But if you look at the intermediate term trend, it clearly points out that the stock seems to have formed a top. So I would recommend that look at an exit strategy when you get an opportunity.
All right. Next counter is Hindustan Copper. This one's from Venkat. This is from a 2-month point of view. Amar, now the stock has run up quite a bit in the last 1 year, but seems to be in a bit of a correction mode now. Currently, the price is below the buy price of the viewer. Should you maybe get out of the stock or wait for a little bit of correction? Mind you, it's 2 months that they're looking for, the time period.
So if you look at this particular stock, the stock witnessed a significant rally, and then from almost 415 levels, it has corrected to 364. If you ask me about the support for the stock, crucial support for the stock is around 350, 355 zone. So I would say you can hold on to with a stop loss below 350. But again, on the upside, the level that you need to just keep a close watch on is 380. Because if that is taken up, then you can expect some upside move. But looking at the trend for the stock, the long-term trend for the stock remains very strong. There's no doubt about it. So, but intermediate and short-term trend, I would say particularly the short-term trend clearly shows that it's more in for consolidation. It could be a range play. So given an opportunity, you should look at exiting the stock.
United Spirits is the next counter. Lancelot, coming to you on this one. We've got Dilesh Joshi from Mumbai, who's bought at levels of 1,080. He's got 70 shares looking to hold for the long term. The question is, it didn't have the best Q4. Of course, it was better than expected. Profitability under a little bit of pressure because of raw material costs. But the prospects look good for the long term?
Yes, Alex, I think the prospects are looking better for the long term because, while there was a raw material increase which led to, margins getting impacted in the last quarter, I think with a good monsoon, you would see better, availability of raw materials for them, and that would help in terms of bringing down costs and margin improvement. So with volumes improving and volumes set to improve over the next 12 to 24 months, one will see much better financial performance, and valuations are not, let's say very high as compared to the peers. So one can look at, holding on to the stock or waiting for a dip and buying into it.
All right. Unfortunately, we're out of time. Thanks a lot, Lancelot and Amar, for joining in on the show and for answering those questions for us. And viewers, if you were not able to take your questions today, we'll take them tomorrow, definitely. But don't go anywhere. We have lots more lined up for you here at NDTV Profit.
Hello and welcome. This is Hot Money. I'm Magam Vakil, and in this show we take you through all the stocks which are buzzing in trade. Right at the top, we start with the markets, which are at the moment looking weak. We have the Nifty, which has come off from day's highs, and in fact it is declining by around 0.6% as we speak. And as far as the Bank Nifty is concerned, a divergent move up around 0.3%. Remember that today is also the Nifty futures as well as options expiry. And on the other hand, we're looking at a new new series for the Bank Nifty. So these are some of the things that we need to keep an eye on. And besides that, of course, keeping in mind that the outcome of the general elections is on Tuesday, we have about 2.5 sessions left for all the action as far as volatility is concerned. But, I'll say no more and take a look at all the stocks that we intend to, in fact, address in this show today. So we're certainly going to talk about Tata Steel. We're also taking stock of the entire FMCG pack, and we're also considering Cummins India. These are largely what we are going to be talking about in the show today. And we have with us to discuss this Sharmila Joshi of sharmilajoshi.com. Sharmila, good morning. Thank you so much for joining in. Before I come to you, let's get in my colleague Kanika to tell us about how the quarter for Tata Steel has been. Kanika.
Right, so Tata Steel's quarter four results came out, and its operational performance did beat estimates. Its revenue fell 6%, which was mainly due to lower realizations, which were partly offset by higher India volumes. Now coming to EBITDA, it declined 8.6%, but still beating estimates. Margins also contracted to 11.2% versus 11.5% last year. Now this was despite lower steel prices prevailing in the quarter, but it was also aided by lower coking coal consumption costs. And finally, net profit, which fell 64%. This was mainly because the company incurred exceptional losses of rupees 600 crore odd in the quarter, which was mainly due to surrender of Sikinda chromite block in Orissa and due to restructuring costs in the UK. Coming to India operations, the steel demand continued to improve, and the India EBITDA per ton fell by almost 12%, which was pulled down by lower average selling prices. Coming to European operations, the demand here was subdued, and the EBITDA per ton here narrowed sharply, and the deliveries in Netherlands rose by 11% quarter on quarter on higher production, which was due to reline in the blast furnace 6 in early of Feb. And the company has also stated that it will close its blast furnaces, mainly number 5 and number 4, by end of June and end of September respectively, and it will set up electric arc furnace by 2027 at Port Talbot in Wales. The company has also issued non-convertible debentures in one or more tranches, and the amount raised is almost rupees 2,700 crore. And finally, the company has also invested in its overseas unit, namely T Steel Holdings Private Limited in Singapore, where it will infuse funds of almost 2.1 billion. And the funds will be used by the holding company to repay existing external debt at offshore entities and to support UK restructuring costs. The existing debt instruments here, up to 565 million, will also be converted into equity. Back to you.
Thank you so much for that, Kanika. So a lot of updates coming in. Of course, while we have seen a decline in revenues, there has been the EBITDA, which is coming off as well. Those numbers are above expectations, but the street, of course, at the moment is looking at selling the stock. And that explains the decline in the stock price today.